As we move into chapter three is really a continuation of journal entries. And so when we talk about journal entries, remember the whole purpose of journal entries is to get the information that's happened in the business, the financial transactions into the system so we can later report in our financial statements to our users about the story of business. So that's the purpose of the journal entries. So when we talk about adjusting entries, we're really talking about adjusting journal entries or AJEs. And all they are is they are adjusting things that have not yet been recorded, but here we are at the end of the accounting period, and we have some adjustments to make. So these adjustments could correct errors. They could be additional accounting events that happened, that we haven't recorded yet. So in this example, what you're going to see is that I'm actually providing you with the adjusting entry events. And these are examples of adjusting entries that I want you to think about, okay? But really know that the starting point for all adjusting entries is really that trial balance. So as you look at some of the other documents provided in Canvas, you are going to also see this one here. Now, if you recall, this was our trial balance that we had as soon as we were done with the regular journal entries that were dated June 1 through June 30. Okay. Now what we're going to do is record these AJEs or adjusting journal entries to get to an adjusted trial balance that we can use to create the financial statements, FS, financial statements. So the rules still apply. Debits have to equal credits. Now we don't have to adjust every single account. We're only looking for accounts that need to be adjusted. So keep that in mind. One final thing. For cash, we're never going to adjust cash in an adjusting journal entry. Okay. Cash, the balance is what the balance is. Now later we are going to talk about doing bank reconciliations to make sure we have the correct amount of cash present, but we would never adjust cash. We can never go back and say, oh, well, I would like to have more cash in my bank account. That's not how that works. But what we are going to say is, oh, we need to have more accounts receivable recorded. We need to have fewer supplies recorded. We need to have the appropriate amount of prepaid insurance. So keep that in mind. The other thing that I want you to keep in mind is that if you're thinking about a timeline, okay, where we were was here. This was the month of June. And every day that went by, we recorded a transaction. So I don't remember exactly how many days there were, but pretend like those are all of the dates we recorded, okay? We were physically at this point, this point, this point, so forth and so on. Now with adjusting entries, all of these are going to have a month-end date of the 30th. That's because we are now out here in the month of July. And let's say we're working on closing our June books or finalizing our June books. We might be here on July 5th, okay? Because we're not going to work the 4th of July, but maybe we're here on July 5th, closing June. We're talking about any activities that are occurring here that are actually June related. Okay, so that's the process of the close system. Every company takes a little bit of time to close their books at the beginning of the month. They are closing the previous month. So we are actually in the month of July recording things for June. So everything gets assigned a 30th date or whatever the last day of the month is. Adjusting journal entries always recorded as of the last day of the month. So let's just look at a couple of these and what they look like. So the first one here, Jim recalls finishing up a job search for Mac Brown. He forgot to bill him. Now, the question is not, is that good accounting practice? No, it is not good accounting practice. We should not forget to bill someone, right? But the idea is that after looking over our our trial balance, we need to get it to the adjusted state. And we're saying we forgot to bill him. Maybe our accountant was out of town. Maybe they were on vacation. Okay, whatever the reason, we need to go ahead and adjust. So as we do that, we're recording the same journal entry, okay? But we're recording it as of July 30th. And how do we increase accounts receivable? With a debit And I seem to have already forgotten, of course, how much it was. For $980. So we're going to debit accounts receivable for $980, and we are going to credit our consulting fees. So the fact that we're recording adjusting journal entries, we're still recording the same type of debits and credits. We're just not recording them in the month that they occur. Now, instead of going back to our kind of messy general ledger, I wanted to use this one instead. Okay, so how do we post this? Now, this works the same way. Just imagine with your T accounts, debits are on the left, credits are on the right. Let's look at accounts receivable. Remember, it has a debit balance of $5,300 because that's what's owed to us. Now, our adjusting journal entry is going to debit or increase that accounts receivable account. And I will be honest with you, I already know that we don't have any other adjustments to accounts receivable. So we're going to go ahead and finish this out to get to that adjusted trial balance amount. So 980 is an increase. We're going to add that to our 5,300, and we end up now with 6,280 in accounts receivable. But remember, we still have to keep all of our debits and credits in balance. And so our credit was to now down here in consulting fees, 980. So before adjusting entries, we had 9,800 of revenue or consulting fees. Now we're adding the 980. Remember, credits increase revenue accounts, which increase equity. So now our final balance of revenue is 10,780. So now that we've introduced adjusting journal entries, take a step back, make sure you feel comfortable with that. In the next video, we're going to wrap those up together.